The American economy stands at a pivotal crossroads in 2025, largely influenced by an intensifying tariff war between the U.S. and its major trading partners. As tariffs imposed by America and retaliatory tariffs from other nations begin to bite, the economic forecast is becoming increasingly complex. This article explores the implications, potential outcomes, and future outlook of the U.S. economy amid these trade tensions. Understanding the current scenario. Recent U.S. tariffs have primarily targeted imported goods from key economies such as China, the European Union, Canada, and Mexico. These measures are designed to protect American industries and promote domestic production, but they have triggered a cascade of retaliatory tariffs, resulting in a challenging economic environment. Industries ranging from agriculture and manufacturing to technology and retail face higher import costs, strained supply chains, and heightened uncertainty. Impact on GDP and economic growth. The repercussions are already evident. Goldman Sachs, a leading financial institution, has recently revised downward its growth forecast for the U.S. economy, predicting GDP growth at just 1.7% for 2025, a slowdown attributed directly to the impact of tariffs. These barriers to free trade have introduced inefficiencies, raising costs for both businesses and consumers. Higher production costs and disrupted supply chains are weighing heavily on economic productivity and overall growth. Consumer prices and inflation concerns. Perhaps the most immediate impact visible to everyday Americans is the rise in consumer prices. Products ranging from electronics and automotive parts to groceries have experienced price hikes. Tariffs on imports lead directly to higher costs, which businesses inevitably pass on to consumers. This in turn feeds inflation, placing a financial strain on household budgets already coping with previous inflationary pressures. Market volatility and investor sentiment. The ongoing tariff battles have rattled investor confidence, fueling significant market volatility. Stock indices have shown increased instability as investors react to uncertainties surrounding trade policies. Companies facing higher import costs and declining global competitiveness often experience reduced profitability, prompting cautious investment approaches and impacting market performance negatively. Risks of stagflation. Economists now warn of the real possibility of stagflation, a troublesome economic condition characterized by stagnant economic growth coupled with rising inflation. The Federal Reserve faces a delicate balancing act. Increasing interest rates to combat inflation could further slow economic growth, while failing to act could exacerbate inflationary pressures, further eroding purchasing power and economic stability. Future economic outlook and solutions. While the current economic outlook appears challenging, it's not without potential pathways to improvement. Trade negotiations, diplomatic engagements, and multilateral cooperation could play crucial roles in easing tariff tensions and restoring confidence among trading partners. Domestically, policies aimed at strengthening economic resilience through innovation, investment in infrastructure, and workforce development could help offset some negative impacts. Conclusion. As the U.S. economy navigates these turbulent waters, the decisions made in the coming months will significantly influence the economic trajectory for years to come. Tariffs, while intended to bolster domestic industries, present clear economic risks, including slower growth, rising inflation, and market instability. Balancing protectionism with global trade integration remains essential to ensuring a stable and prosperous American economy. The coming months will reveal whether policymakers can strike a careful balance to mitigate the negative impacts of tariffs while safeguarding America's economic future.